with your thesis of stronger for longer. So fill us in on this thesis on the U.S. economy. What happens if nothing happens?
Right. That's right. That's right. I mean, I think one of the things when you're trading macro markets, you're trading differential probabilities. And so I think what you want to look at when you're thinking about where there are good trade opportunities is where you see certain things that are priced in a way that are meaningfully different from the probability that might transpire. And so right now, as you mentioned, as you look at the Fed funds pricing, the options implied distribution of 2024 pricing, there's basically only a 10% chance priced in that will have 0 or 1 rate cuts by the Fed over the course of 24. And when you think about that, and I should say, and there's something like a 1/3 chance that we're going to have more than 200 basis points of cuts priced in. And when you look at the actual underlying economic data, what you see is that growth is pretty good. We just got the biggest easing of financial conditions over the course of 2 months in the last 40 years. If anything, timely growth measures are showing a bit of acceleration. And so when I think about the balance of the probabilities, I'd say it's much more likely that there's sort of a 30 or 40% chance that we have a fine 2024 and the Fed doesn't do a whole lot relative to the 10% pricing versus, a deep, deep recession, which is priced at 30 or 40% in terms of the distribution of the market, when the probability looks closer to 10% to me. And those are the sorts of trades that open up in the macro environment that are good risk return trades that you want to put on.
Bob, the last time